Hello, hello. I hope you're doing well, enjoying your day. I'm so excited to give you this presentation that I've made. It's about the Utah market and just an analysis. So I'm going to dive into it. Um, First thing I wanted to talk about is mortgage rates. We looking at the history of mortgage rates, we are still in a good spot even with what we've seen in these past couple months with this spike right here. We are right around where it's been for the past 10, maybe even 15 years. So that's a good thing. We're not going too crazy yet. We can see last year we were historic lows. Fed started raising the rate, prices went up. And then in May, Fed raised the rate again, and then we actually see a downturn, which Dr. Lawrence Yun of the macro economist for home values, he's a member of NAR, and he actually predicted this to happen right around the 5% is what we hope to continue to see. Mortgage lenders have already corrected in preparation for continued rate hikes from the Fed. And so hopefully as these rate hikes come, we will continue to see that 5% right around there. Next thing I'm going to show you is inventory. We've had historic low inventory in Utah, less than 3,000 units last year. That's this black line available at a time. This year, we're actually seeing a growth, which was much needed. We're up to almost 5,000 active properties on market, which we need. If we go back 5 years to 2017, we were above 7,000 for most of the year active properties. So just to show that in perspective, we still have plenty of room for growth on the market and supply. Back in 2012, we were even above 14,000. So it would be great to see between 7,000 and 10,000 active units here in Utah to get back to a more stable market where we can continue to see healthy growth. If we look back 2016, 2017, 2018, we had very healthy growth those years. And we were at about 7,000 to 8,000 active units during that time. During the shortage, we can see some healthy growth here, and then an extreme, we dropped off from about 5,000 active units to this 2,000 to 3,000, and now we're at a historic growth and everything. If we look at total homes sold over the years, we are continuing upwards on that, which goes hand in hand with the growth. We've got from 2004, then we had the recession of 2008, 2009, and then have grown ever since then. So all of the indicators that I'm seeing are showing that we are shifting, which is great. We need a shift in the market to go, an analogy I like to make is we're in a marathon, but the last 2 years have been a full out sprint. And that is not a way to win a marathon. So we do need a shift. Mortgage rates look like they're leveling out, and hopefully they will continue to do that. Home values are still going up. Inventory is going up, which is leading to a more sustainable market. And as far as the rental side of things go, rents are typically a lagging indicator, and we are seeing the exact same thing here happening. We have had significant rent increases. We're seeing upwards of 10% on rent increases this year from last year, and that goes along with the home value growth from last year. So I'd love to talk to you guys more about this, but I'm running out of time, and I'd love to get your feedback on what you guys think is happening, and I will update you more in the future. But in my opinion, things are looking strong. We look like we're shifting in a great way where we've pre-adjusted for future rate hikes from the Fed, and we won't have to do any major adjusting in the future, and we should see a strong market moving forward. It won't be these crazy 20% gains, but it will be a safe 4, 5, 6%, which is what we need to get back to. Hope you guys are having a great day, and thanks for listening. Take care.